read about a great deal. And there is complexity in shale, there are different types of shale oil prices. But the interesting thing is how long oil prices will persist at these levels and how that may feed back eventually to supply being offered. Already we're seeing a lot of headlines about various deals that have been cancelled. I think there were some very big announcements actually just in the last few days. So I think this is something which, again, I offer to you as by way of context. We don't know what the feedback is going to be. It's a function of how long you expect oil prices to stay where they are as well. That's also a function of geopolitical uncertainty and risks, and so it's a pretty complicated picture. But I think we are already seeing signs at a current level of oil prices, which people are expecting to persist for some period of time. There's a pretty significant chunk of production that's not going to be viable. So if you put all this together, and here I'm going to show you some pictures in abstract. I'm not going to be talking about this feedback to supply from oil. That's a complicated element which we have not modeled. But to put it very simply, the effect of low oil prices on GDP, you have to think about why the oil prices are lower. The oil prices may be low because GDP is weaker. So oil prices being low is not helping you. It's just a reflection of the fact that GDP is weaker. That's why analyzing whether there's demand is very important. Now, if it's supply, because OPEC has just decided that they're just going to keep production going, that's good. That's really the important part. And there are a lot of numbers floating around out there about how much of the reduction in oil prices is supply. I think the fund is making some assumption right now that maybe it's about 2/3 of it is supply. But since we don't know the final answer to that, we present scenarios. And the scenarios are telling you different assumptions about how much of the reduction in oil prices is because of higher supply, but very importantly also how long this reduction will last. And that matters a great deal for the impact. You can see that if it's a supply shock that tends to taper off after a period of time, the impact of a 10% reduction in oil prices will give you a 0.3% up on growth. If it's a much more persistent supply shock, 10% reduction in oil prices gives you about 0.8 on growth. These are the official sort of numbers that we've been focusing on. I would say one thing which is very clear though is that the fiscal consequences for oil exporters are quite severe. This picture ironically doesn't have Russia in here, but Russia is really one where I think it could see a bit of a tipping point. But with oil at I don't know what the latest prices, but somewhere around there, and you can see these are the budget break-even prices. There's a very large chunk of the oil exporting universe which is going to need to make pretty sizable fiscal adjustments in order to make their budgets balance. So, I wouldn't have a presentation like this being complete if I didn't sort of summarize to you the policy implications of it, but I won't spend a lot of time on this. I think I've spoken already for quite a while, but I'd be keen to give you take a bit of a break and open the floor to your questions. I think the main messages out here are messages that I've already been discussing in my presentation to you. The need for structural reform, the need to continue to demand support, the need to do your homework and keep your macroeconomic balances in good shape. So I don't think there's anything particularly deep out here. But I think I would just say that honestly, the structural reform bit I think is one that is something that I think is going to keep being on the radar screen quite extensively. So let me stop here then, and I think I've actually spoken much more than I planned to. So let me perhaps open the floor, and we'll be very happy to take the questions that you want to have. I can't guarantee that I'll be able to answer them, but I'm happy to hear the questions at least. Um, well, so as I was mentioning to you, these numbers that I'm showing you are from the October VO. And Olivier Brochard will be presenting, I think, the VO update, I think actually in the next few days, quite soon. I think you will see a further downward reduction in the growth outlook globally. I don't recall the exact number. It's probably 0.2, 0.3 rate as well. And the World Bank has already come out with their own estimates. I don't think we've gone that far apart. I think there are three components to the revision downwards, and then the fourth story. The three components are, you see a substantial downward revision of Russia. I think we are beginning to appreciate that the situation in Russia is much more difficult than we had anticipated earlier. I think also the currency move is being very part of that as well. Another big chunk of it is coming from Latin America. I used to actually have to work with the fund in Brazil. And we kept expecting that the monetary stimulus that they put in place are going to get the economy going again. So it was mostly demand. But it really looks like the structural challenges that the visible authorities face in this big country. And the third component of it is largely happening the other direction. So shuffling around the euro area. So the question that I think everyone has, though, which is really sort of the puzzle, is, and this will be a challenge for the fund as well, is how do you communicate this? It's kind of odd to be marking down growth when you've had this very positive shock from oil. How do you balance the two? How is it that you had such a huge reduction in oil prices? Shouldn't this have actually boosted growth outlook? And the story is that, well, had there not been this reduction in oil prices, probably the outlook would be even worse. Which is not a very comforting picture, frankly. And I think that's the takeaway. Yes, please.
Can you shed some more light on African economy? Like which part or which certain country do you believe present like a good business opportunities for multinational companies?
Well, I'm afraid I'm not an expert on the Africa region, so I would be very humble in telling that I'm not all that well placed to answer very, very specifically. But I think that if you look at the fastest growing parts of Africa, certainly Kenya is up there. South Africa is a more complex picture. It's a very large market, a very sophisticated market. I think there are many structural impediments, challenges there, which weigh also on the business environment and the investment environment, but it's naturally a place that I think anybody who has a presence in EM, assets, a presence in EM investment as well on the real side, has a pretty large exposure there as well. Ghana had been sort of the poster boy, poster child for a period of time. I think the picture of Ghana has gotten a little bit more complicated. Perhaps they grew too fast, too much leverage, and there's now some adjustment that's required. So that might be a little bit of a mixed picture there. And the other economy, of course, which is very large in the region is Nigeria, which is, I think, is a part of the region where we're probably going to see some challenges now with the reduction in oil prices. But the growth opportunities are there in a range of economies. Mozambique. These are economies, keep in mind that one reason for the very fast growth rates that we're seeing in this part of the world is that they're growing from a very low level of income. So they're at a very early stage in the catch-up. There's a lot of opportunities for investment. There are very large infrastructure requirements, infrastructure financing, infrastructure investment, I think, will be quite significant out there. But they're also developing large domestic markets as well. So you find, I think, businesses like telecom, financial services as well, that are increasing presence as well in this part of the world.
We are looking into the US, whereby the economics has done very good, and especially compared to Europe and Japan. And we are thinking about and concerned about the increases in interest rates. What is your view on the expectation of the Federal Reserve, the interest rates, the impact on the currency, and also the asset price such as stocks and bonds?
So I think the fact that U.S. monetary policy looks like it's largely normalized will start taking off is a good thing. It reflects the fact that the US is recovering, and it's a strong recovery finally. So that's generally, I think, positive for the US and positive globally. In terms of the timing, I think the last, there are ranges of sources. You have, you look at the surveys of the Fed, the board of governors that come out, which give you some information about how the Fed is thinking itself, speeches that are being made by the various members of the board of governors. Of course, there's the information from financial market expectations as well. But generally, I think the call is for liftoff to take place sometime, I believe, in the middle of next year. And actually, interesting,
2016.
Sorry, this year. Oh, we're in 2015 now. I'm sorry, I lost track of the year. No, middle of this year actually. But I would just offer two thoughts on this picture. One is that actually someone in the audience yesterday in Singapore made this point that actually one of the speakers did, that it's not so much anymore about the timing. We know it's going to happen probably sometime in the middle of the year. Though I would just say I have a comment about that. But the point they made was it's not about timing, it's about how much and how fast. And there the range of views is quite wide. So the comment that I would make is that, so at the fund, we've been arguing to the Fed for some time that they need to think very hard about what we call spillbacks. There are spillovers. The Fed does things and it has implications for capital flows and exchange rates in emerging markets. But the argument that we make is that the US has now become, it's still a very large domestic economy, but export growth has been quite important for the recovery. So what happens in the rest of the world now matters increasingly for the US. And the strength of the dollar matters also for the US a great deal. And so if you put that kind of a factor into play, and the rest of the world, as you see from my presentation, the outlook for the rest of the world doesn't look all that great. You've got the Fed tightening, ECB about to ease even more, and DOJ having already done massive easing. Exchange rates heading, basically the dollar is going up, we don't know how much. So whether that affects the Fed's decision about timing is, I think it's a complicated question, because they've invested so much now in terms of sending a signal about timing and forming the expectations about that. But I think it might, you could make an argument that it would probably have some consideration for the pace and the ultimate size of the liftoff. And I think it's going to be a very interesting next 6 months actually, as things become clearer about what the ECB, this European court decision is huge. We've been talking in theory about QE by the ECB. Now we will see what they can actually do and how they will do it, and what the implications might be. So I think in the next 6 months, and then we will have another round now thinking about the DOJ in Japan as well. The budget has just been announced, and they put off a lot of hard decisions. The question of what they can do on structural reform. One thing that's going on is TPP and all that. But if you put all these things together, I think if I were you, I think from the US policymakers' perspective, to the extent that they view global demand and global conditions now being increasingly important for the United States, a judgment will have to be formed in the next 6 months about what the dollar and the strength of the dollar might mean for the ultimate monetary policy decision. And you've seen this, Stan Fisher was making some comments, I think about 2 months ago, where I think it was the first time actually that I heard someone from the Fed actually explicitly talk about the dollar, the strength of the dollar, as a factor for consideration of the decision of liftoff. Okay. Move on to the next one. See what you can really go with.
ครับอันนี้ขออนุญาตเบรกสัก10 นาทีนะครับให้ดร.วิกรมได้พักนะครับแล้วเดี๋ยวเราเริ่มต้นต่อกันในเซสชั่นนี้ครับขอบคุณครับ